Today be one of those. What a stupid intro. Today be one of those days, man. Tired. Guys, what is up? Welcome back to Trey's Trades. We're going to talk fast. Don't skip class. I remember by saying I'm not a financial advisor or expert. So take what I say, they're going to solve. Let's get into the video today. We've got quite a bit to discuss. We've got a long agenda. I know that yesterday I didn't put out a play of the day, but my life the last weekend, the last 30 hours has been all streaming. I've been pretty heavy in r/plays, which I'm going to mention last on the agenda. But I'd like to go over a couple different things, right? AMC. You can see here, we always like to start off with our girl Amy. Similarities to previous rips, and there's actually one that I find to be pretty fascinating right now. I know there's some Wyckoffers, or as I like to call them, the Whack-offers, because you get it. That's so stupid. But I do see some similarities nonetheless that I wanted to point out. I think there's some interesting stuff happening. I want to go over the strength box, which is going to be significant in the way that our girl Amy moves forward. I do still actually think we're pretty decently close. We're close to a rip. I would not be surprised if this week is a good week. What I'm watching really is the acceleration or the deceleration of the algorithm, the way that this stock is pinged back and forth, you know, with the way that these algos move things. So we're gonna look at that. We're gonna look at the bull and bear case scenario as well, the good, the bad, whatever, what I see as being possible. And then we're gonna go into the SPY. The SPY, you know, there's a couple uncertainties that are currently circulating around. I still see people talking about the yield curve, which I find to be just asinine. I think this is a really goofy thing to get worked up over. I do have a video about that if you want to look into it, but we will discuss that. Russia, I'm just keeping up on Russia because this is a situation that is influencing the way the stocks move left and right, up and down, whatever, side to side. You get jiggy with it. Stocks are kind of uncertain right now in terms of neutrality. I think it's trying to decide whether it wants to continue downward pressure or move up, and we'll discuss that. I personally believe that it's going to continue up. Levels on the SPY to watch for, so we can see some continuation on our girl Amy. It's no coincidence. I mentioned this in my video this weekend that the SPY is going to influence the way that AMC moves, and it surely did. I don't have a play of the day to review, but we will have one for tomorrow, which I'm going to discuss with you at the end of the video here today, which is right here, tomorrow's play of the day. I will outline that for you. Pretty clear as day. And then in the last piece is going to be r/plays. Before we get started, before we get going, if you'd like to join my Discord, it is absolutely free. It's going to stay absolutely free. We've got a great algorithm coded in there so that you can use different crossovers and different time frames to help make yourself some money. People do pretty decently well with it. So with that being said, I want to point out to you a couple different things that I find to be interesting with AMC. What I've got here is drawn up a couple different arrows. And if I was to show you this on an actual chart, I've got these copy and pasted over so that I can show you exactly what I mean. There's some pretty interesting similarities in the way that AMC is kind of trading right now compared to where it's been in the past. Now, this candle right here catches my attention in a pretty good way. In the same way that this candle, maybe I didn't take the right screenshot, but I'll just show you on my actual chart. The same way that this candle does right before we got our major run up. I think this one looks more lined up with what's more likely going to happen, but I do want to discuss that with you here today. So check this out. What you see over here is a quote unquote breakout, right? We were in a super long downtrend, which you can see right here, right? If I was to draw this out, just continues down, continues down, continues down, continues down. Does that sound familiar? I mean, that's really basically what you did is you're a turd, and that turd's been getting flushed down the toilet for the last 9 months, and it's a really slow toilet, man. Well, take this. This is basically like a code of algorithm. And the algorithm for AMC, the shorts, the people who are betting against this company decided that they wanted to push this down for a prolonged period of time, right? Until basically what looks like from out of nowhere, you saw a form of a reversal. Now, what was the reversal kind of like? Well, if I draw this out in the most simple way possible, let me make this a little bit thinner just so that I can show you. I'm going to change the color to white. Well, what you can kind of see here, right, if you were to look at this in sort of a larger time frame, is what appears to be, wouldn't you know it, a falling wedge. And as it broke out of the falling wedge very slowly, which you're going to notice down here, as volume starts to slowly ramp up, gets a little push, and then a rejection off of this candle to what is the next candle highlighted in the red arrow. Now, I think what this red candle is representing right here is where we presently are trading. It's the pullback. It's the rejection off of a critical level. And the critical level back then, funny as it sounds, I mean, this is pretty goofy to think about, but it was about $3, right? $3 came back down to retest that $3 breakout in the same way that AMC is trying to retest the breakout right now. And I'm going to show you this. Check this out, right? This is where we're at right now. What do you see that just happened? Well, we got this nice string of candles coming off of what was a really nice falling wedge breakout. So I'm going to come over here and I'm going to show you this falling wedge breakout. Larger time frame. Definitely a greater amount of price action for the push down here. But nonetheless, this is a falling wedge in the same way that that was a falling wedge. This is just loosely drawn out here for you. Breaks out of this falling wedge. Even the top line, we're just going to take the bottom line here. You can see the bottom line breaks that out. And then as that happens, what do you notice? A slow ramp up in volume. The candle starts to get a little bit of movement, and it breaks out over a critical level. This right here appears to have been the critical level, right? This is an acceleration. I would like to think of this as an acceleration. Let me draw this out really quick. This portion right here is an accelerated breakout. Acceleration means a speed up of the process of an algorithm. Speed up algorithm, right? Doesn't necessarily mean that it's going to go up or down anymore. It just means that in my eyes, you're seeing the stock move at a quicker pace than previous. In that same regard, though, this price action right here strikes me as eerily similar to this right here, because if you look at the levels that it's covering, right, let's come back to the candle back in January. I think what you're going to notice is that what it does is it comes back down to retest these previous levels that were covered by this candle. Comes all the way down to just barely above, barely below the base of this candle, kind of tapping down into the wick, and it rejects off that, consolidates, and continues the rip up. Well, if you were to come back, what do you notice is happening with these candles right here? If you were to take the candles that presently exist and make them into one hyper candle, what would you see, right? Well, I'm just going to draw this out for you right now and show you about what this would look like with some red. So check this out. If we were to draw this out in red, you can see that this level right here comes all the way down to about this level right here. This is colored in. This is all solid candle bar. This is a wick. This is a wick, right? What does that look like? Covers about the same level as this. Covers about the same level as this. And it tests out these levels from this candle. Well, if we come back to January, looks pretty eerily similar. Does it not? Granted, this one's missing the wick on top, but you can see it's covering, basically just retracing, trying to see, do we want to continue with this breakout from this candle? I mean, it's eerily similar. It's crazily similar, even down to the fact that it tried to push higher and it rejected off of that push higher, the same as this one, right? Pushes higher, didn't quite get it. Daily candle right here. If you were to take this and pretend this is one big daily candle, this to me, this white section right here is a deceleration. I personally believe that this is a slowdown. It is a slowdown of the presently active algorithm that moves this stock back and forth, up and down, up and down, up and down. Let's just be frank with ourselves, right? As much as we like to bang our heads against the wall and we protect and we stand for what we believe in, the computers are 90% of what move this thing, right? We're along for the ride. We're along for the ride as retail right now until these algorithms say it's time to rip the fucking cap off this bottle, man, and drop a mento in it. I mean, that's really what it comes down to. And to me, this is a deceleration coming off of acceleration that happened here. Up arrow is going to signify acceleration. This is going to signify deceleration. So if you were to take these principles, and let's just say that this is a theory, by the way. I don't know if this is going to be absolute fact, but this is something that I personally believe. 10 being fact, 1 being complete speculation. I would put this in terms of confidence, maybe at like a 4 to a 6. I'm not convinced, but a lot of things do line up. Coming down to the volume, right? Volume ripping up, coming off of the falling wedge breakout, coming up with the acceleration phase and the rejection candle. I personally just believe that this has been a slowed down version of what you saw happen back here. Now, what happened back here? History can teach us anything. It's that it usually repeats itself. And sure as shit, it already has back in June. And I think will again coming to the future. So what it did, if this is to continue on the path that it's on, I think what you're looking for is this next Doge candle. This Doji candle represents essentially indecision. Indecision. And I think what this would look like, if we were to draw it out, it would be price action somewhere around here. I think you're going to trade back and forth between $24 and $26, maybe a hair of a wick up here, hair of a wick down here. And it'll close probably between 25, $26 for the best case bull scenario for AMC. this is what I would personally like to see. Maybe this is 1 candle, maybe this is 2, maybe this is 3 daily candles. By the way, that's the time frame that I'm looking at. It's possible, maybe it's 1, but if it is 1, it means that you've exited the deceleration algo phase and have re-entered the acceleration. We are back on a different time frame. Essentially, think of this as the charts are not trading price, they're trading time. And what you're watching is a speed up and slow down of the pace in which they are trading this time. And I'm waiting to see whether or not they're going to continue on this deceleration track or if they're going to speed things up. One thing that I've noticed is when we rip up, acceleration typically meaning, by the way, that it speeds up the rate at which these algorithms are trying to push a stock, right? You typically see faster movement in track with what I personally believe algorithms would like to trade. If you get this Doge candle and it continues up and it retests, and I think the level that you're looking for on a retest is going to be this box right here between $30 and $34. I think if you come up that and you break it, this is going to look a lot like back in January where you could basically, you can just grin. You can sit back in your chair, you can pop open a nice cold Surly Furious IPA and just chuckle, because you know what came after that, right? We look back here in January. What came after this Doji candle retest and breakout is a couple of slower movement days. Volume continued to inch its way higher, right? Higher volume bar, and it broke out. I mean, the next day was just absolutely monstrous. You got this huge after hours push that it was up 100%, and the pre-market was up 300, 400, 500% at the greatest point in time. And I think you can see that again. I really genuinely do. And if you'll notice one thing, by the way, what I find to be the most peculiar is the volume down here. Check out this volume, right? Now, if we're following this acceleration, deceleration theory, what you're going to notice is it continues on this breakout, volume slowly picks up, and as it looks like it's dying, the volume comes down for a brief moment and then continues higher. It's like a little dip. It's like you're getting a taste of some grizzly wintergreen in your tongue. I'm like, this is kind of shitty. I don't know. I don't like chewing. This ain't my thing. But it gets its movement back up. Well, you're watching this exact same thing happen right now with volume bars on AMC. So we're going to come back to our present moment in time. You're going to look at this. You're going to see, yes, we got a huge ramp up. We got a ramp down. Granted, this is what I think to be a deceleration phase, but it's following almost picture perfect the exact same thing. So what my theory is, and the way that I'm going to wrap this up, and we're going to move into the next things that I like to talk about, is I personally believe the movement back in January equals the movement that you are seeing right now. I think that the movement the last 5 days reflects 1 day of price action, PA, in January. And I think it's that downwards bar of pressure right here. I think you're getting to witness this deceleration. That's what this 5 days equaling 1 day would be, is a deceleration of the algo that moved that 1 day bar in a single day. It's following a lot of the similar things. The volume looks pretty much the exact same. The price action covered looks almost the exact same. It's following sort of this similar parabolic arc up. Looks pretty interesting. That's, I think, the bull case scenario. Bear case scenario is I'm just completely fucking wrong, in which case I think you're going to see this come down to test $21.25. Didn't quite get that today. Push down. I'm going to show you the 1 minute candle bars here really quick and show you what this kind of looks like. But if you look at the 1 minute bars, what you're going to notice is it came down to $22. Hard rejection. IWM got to move back up. As I've mentioned before, IWM and the SPY reflect greatly in the way that AMC, GameStop, and all the other meme stocks and small mid-cap companies trade. IWM dips down and moves back up. AMC did the exact same thing. That's the algos at work. I mean, that genuinely is. You see IWM bounce, you can pretty much know instantly that AMC is going to bounce with it, and it did. And as long as we see continued strength in IWM and the SPY, I think that this theory is decently likely. Bear case scenario, however, as I've drawn up right here, I think is a tap down to this level on the fib, which is about $21.30. So far, we're in the clear. I'm leaning more towards the bull than the bear. I think it's following this trend line. You can see that it bounces up and down, up and down, up and down, above and below this ascending level of support and resistance. It acts in different ways depending on where the price action is trading. Right now, it's acting as resistance. Hard move above that is obviously going to bring a pretty decent push, as you've seen back here, right? You got to break above this. Big move came. I would expect the same exact thing if we can get back above this box right here. The strength box, which is 2 fib overlays between 50% and 78.6. And I think if you get that, you know, you're probably going to reclaim that trend line and you're looking pretty solid. We can continue on the road that we've been on for getting that doji candle, followed by a nice move up to retest $34. That's going to be a key level, critical level, $30 to $34. This box, I'm just going to label it right now so you can see it. All this, you get a break, I think you see a $10 move within a couple days. Genuinely, I think you really will. $10 move. I would not be surprised to see $40 to $45 within 48 hours of breaking above that box that we've got labeled right there. So with that being said, IWM and the SPY are important. So I do want to touch on what these kind of look like. I've got a video on the yield curve. If you'd like to look into this, I've got all my thoughts very well outlined. It's long. I don't really want to go over the same information twice because it hasn't changed. I think this is a pretty evergreen video. I think it matters and it won't really change. They want you to sell is the title of the video, and it goes over the yield curve. But if you want the 5-second TLDR, basically inverted yield curve typically means that a recession could be coming. People are claiming that the yield curve could push stocks down. I personally disagree, and I outline why I believe that to be the case in that video, so you can go check it out if you'd like to. But that being said, I want to show you sort of the fear and the confidence in the markets right now. This is coming from CNN. They watch what is called the Fear and Greed Index. Right now, we're about neutral, and I think that's actually a decently fair assessment. We're in neutral territory where the market's trying to decide whether or not they'd like to continue the rip upwards or they want to continue the downwards pressure. And this is sort of the pivotal moment. You know, we are already out of the bear trend. We're actually decently close, believe it or not, to being back to all-time highs. Right now we're at 456 bucks. You've got another 20 basis point move until you're back at all-time highs, which is very possible. I think it's tracking decently well. The bull model that I had laid out, which was it breaks out of this rising wedge, which is a bearish trend reversal, and you see it bounce off of this key level right here, coming off of what looks like a downside level of resistance. It broke it, and now it's looking to treat it as support, right? It's doing that pretty cleanly. Doing that very, very, very cleanly. I think you're more likely to see some continuation unless fundamental news comes out from Russia, which you can see right here. Check this out. Russia invades Ukraine. There's more news coming out. In Russia's military, a culture of brutality runs deep. Russia faces barrage of new sanctions after accusations. Not a ton of new stuff. Ukraine's president Zelensky accuses Russian forces of genocide. I mean, it's tragic stuff. It's very sad. And it continues on. And until there is a conclusion to this battle, I think neutrality is pretty fair. I think neutrality, this is what I would view to be sort of the slowdown phase of the market. I stated that I don't think you're going to see as fast of growth in the large portion of the market, not small mid caps. I do still believe very strongly, by the way, that small mid caps are going to have a much stronger move over the next 3 months than the SPY is going to. But I think the SPY is in a slowdown phase, right? SPY today was up 0.86%. IWM today was up 0.16% off of a really nice recovery, by the way. IWM had to come off a really harsh sell-off at the open, unlike the SPY. So that's actually a pretty good sign of strength. I favor that chart setup over the SPY, to be honest. I don't like that there wasn't any retracement on the way that the SPY moved. But nonetheless, bull bear case scenario, and I am going to give you sort of what I would play, which is actually going to be the SPY again, because we're coming up to some critical levels. Once again, very similar to the last time we used the SPY as a play of the day. Bull and bear case scenario. Let's just tie these in together, right? Let's tie these in together. We're not going to go over a play of day review because we didn't have one. I didn't make one yesterday. F's in the comments section because I'm a failure. I didn't do it. I apologize. But we're back, baby. We're giving you another one right now. So tomorrow's play of the day and SPY's levels sort of nuked together. What you're going to notice is the bull and bear case scenario. And I'm going to lay this out for you in case you're new here, in case you'd like to know. I give you call and put scenarios, key C and P. If this, then that. My personal philosophy is I follow 4 generalized rules, which is an entry plan, a stop loss plan, runners, which is taking profits along the way, and then exit, meaning a full exit of your position. And I'll go over those as we continue on. Bull case scenario for the SPY. I think a bull case scenario for the SPY, you can see a pretty key momentum level and box right here, which is between $456.40 up to about $456.60. What I personally would like to see for a bull case scenario, this is how I would take an entry on a call, is if you got a bounce off of, I want to see a bounce off 457.38, a rejection to come back down and retest. Retests are always huge. Retests signify that you're transferring from resistance to support on anything, and a bounce at support is even stronger than just a clean breakout. I would take an entry on a call off of this bounce of 456.40 if that were to be the case. That is one call entry coming into tomorrow, in which case I think you could see a break over 457.38 or so and come up to, by the way, a pretty huge level at $460.42. Before that, I think you're going to see a little bit of chop around here. This seems like a pretty key momentum level, which is at about 458.80. So I'd be watching for that. I think you can see a little bit of this sideways action. And as always, if you see chop is bad, right? We don't like chop as traders. If you do want to take a position on that, chop typically means exit. Movement equals good. You make money on the movement. You make money on that, but you don't make money on chop. You lose money on chop because if you think about it, theta, which is time decay, it's one of the Greeks, which explains to you how you lose value in your contracts. You are only losing if a stock is trading like this, sideways. You don't win there. Only market makers do. They're collecting your premium on theta, and you're losing value on your contracts. So if it chops around any of these key levels on a call, for example, 457.48, maybe 458.80, maybe it's the box, the supply box up here, right, which is 460.30 up to 460.75. Take your profits. You can walk away. I mean, you're looking pretty good. My personal stop loss on this is going to be 10 to 15%. As always, I would take runners every quarter, 25, 50, 70%. I'd look for a full exit off of base key levels. Now, a good question, and by the way, I've seen this in the comment section. Some people have said, well, what happens if the max that I'm up, right? I see chops starting to happen, but I'm only up 30%. Forget the rest of your runners, right? Take your profit. Take your full position off the table, or you take profits on your runners at 30%, and then as it's coming down to 20, you're going to exit the rest of your position. That's the way that I would personally view it. Taking chunks off the table at a time because, true, you could have made more, but you could have also maybe made less. And that protects you from giving back profits that you've already made. So that's the call scenario. Put scenario to me is very simple. I would look to see some form of a gap down into tomorrow, in which case you come back up and you are testing out this key box right here. I think this box is critical. I'm going to level this out. If you want to see the call stuff, go back to that portion of the video. I'd like to see a breakdown of this support line to test it as resistance, followed by a rejection. The retests are always huge. That should bring it down about 454.03. I personally find the call scenario to be more likely here. I think that you're going to see a continuation of trend. It seems pretty likely. And if you do get this test of support, now turn to resistance and a rejection, enter here. Same rules apply. 10 to 15% stop loss for myself personally. I take runners every quarter, 25, 50, 75%. I'd look for a full exit on key levels, which is chop zones. Maybe here it chops around, I'd exit. Maybe here it chops around, I exit, right? Very simple stuff. You're looking for breakdowns followed by retests as a flip. If it's a support now acting as resistance, you want to see the rejection. If it was resistance now acting as support, you want to take that rejection as either a call or a put, depending on which way the price is currently moving. So that's what I've got to say about that. I think the SPY is set up pretty cleanly right now. It had pretty nice price action today, and I'm pretty satisfied with it. I think tomorrow you're pretty likely to see some continuation, but I don't think it's going to come without some form of a retracement. So you're looking for basically that, breakovers followed by retests, entries on the retest if it gets the follow through. So that's what I've got to say about the SPY, those key levels. And the last thing that I have to say is I'm going to be live streaming on Twitch until r/plays closes. In case you're curious what this is a subreddit on Reddit where people are essentially just trying to claim their plot of land that's going to be marked in history forever. The last time that r/plays had this was in 2017, and you get to say you were there. Do you win anything for it? Do you make any money? Do you get this? Do you get that? No, but you get to say that you were there. You get to say, hey, 5 years from now, if I want to look back on this, my picture, which is here, something that I worked on with a whole bunch of people, which is maybe Curious George and AMC, whatever. It was marked in history. DNF. Whatever. Well, I'm going to fix that when I get on. But anyways, that's what I've got for this video, guys. I'll catch you on the next one. Appreciate you. Much love. Light taps as always. And peace.